I always think about the things that make me want to call a cycle top. They're hubris and debt. So hubris is management arrogance gone awry, right? Too much capital spending, too much hiring, too much inventory, building fancy new corporate headquarters. I don't really see a lot of that excess right now anywhere. In fact, there's shortages. And in terms of the debt, it's all been termed out. Nobody really owes a lot now. So I think the biggest risk is probably inflation, but in the form of rising wages, rising input costs that offset the ability of some companies to pass that on to their end consumers. So probably I'd rather own energy and commodities than I would maybe select industrials where they're going to be hurt by those input costs. It depends on the business. Generally, I think earnings are going to be higher next year than this year. That's why I'm bullish. I don't see revenue being offset in most places by inflationary inputs. So I'm pretty optimistic that earnings will be higher next year, and that's what investors care about. They're trying to figure out other risks that can make me afraid earnings are going to decline, and I don't think that's very likely the way corporates are right now.
Sure, Adam, they might not decline, but I wonder whether they could keep growing at an ever-increasing pace. What do you say to people that we are kind of peak everything at the moment, from earnings growth rates to fiscal, monetary support, et cetera?
Look, on January 1st this year, I think the estimates were 15 to 20% lower than they are right now. So clearly their earnings have been a surprise. But over the very long term, forward earnings estimates have existed in the U.S. since 1978. In all but 8 years, the analyst estimates proved to be way too high. So the market's used to sell-side analysts being too optimistic. I think on average, the January estimate for forward earnings has been 14%. The actual growth has been 6 or 7. So I think investors are generally used to estimates coming down. So I think the real issue is, will estimates in earnings be higher next year than this year? If they are, markets tend to go up. And I'm bullish on equities because I see the U.S. as, higher earnings, a pretty good economy, an accommodative Fed, and a fiscal stimulus that's pretty real. And that's 4 powerful reasons to be optimistic. You'd have to be very worried about an earnings impediment that could make you really afraid of an earnings decline almost to get really negative on equities, in my view.